World is getting ready to celebrate International Women's Day. It's happening tomorrow. And today, there's new evidence that in business, it's better to have both men and women on the team. Now, a new study by the International Finance Corporation, a member of the World Bank Group, it looked at private equity and venture capital funds. And it found that performance with gender-balanced senior investment teams generated 10 to even up to 20% higher returns as compared with funds that had a majority of male or female leaders. So it's all about the balance. Now, joining me now is the head of SMS Ventures at the IFC, Shruti Chandrasekhar. She joins us from New York. Shruti, thank you for joining us here in the program. Sorry, you joined us from Washington, D.C. Now, according to your study, funds with gender-balanced leadership generate up to 20% higher returns. Tell us about the study and how did you reach this finding?
Kristie, thank you so much for having me here today. So what we did is we looked at the financial returns on over 800 private equity funds and venture capital funds across emerging markets, and then looked at the teams that were making the investment decisions at those funds. And we looked at the teams by saying, you know, is this a diverse team or is this not a diverse team? And we thought a lot about how we categorize it. And finally, we used the rule of 30%. And we said, if more than 30% of the team are members of the opposite gender, we categorize them as gender diverse teams. And we looked at the return of that subgroup of funds versus those that were not as diverse. And what we found is the funds that were diverse had up to 20% higher returns for their investors.
Well, so the key takeaway here from your study is it pays to have gender-balanced leadership.
Absolutely.
But why? What is it about greater gender diversity that brings about higher returns in private equity and venture capital?
So the other part of the study that we found is when we looked at the companies that these private equity and venture capital funds were investing in, if those companies were more gender diverse on a similar measure, we found that those companies provided up to 25% better returns for their investors. So I think what ends up happening is most private equity and venture capital funds are sourcing their investments from their networks. When we surveyed over 500 investors, that's what we identified. And when you have a more diverse team, you're sourcing from a wider network of deals. And so you're able to tap into those more diverse teams and achieve those better returns.
Now, we know that women are woefully underrepresented in private equity and in venture capital. Do you think your study, which focuses on the money, the bottom line, is that going to help, entice companies to think differently and to bring more women into these sectors?
I hope so. I think a lot of the firms are already on that path. Like, firms are thinking about it, given the trends that we've been seeing in the news and in the market over the past year or two. So there's some firms that are already on that trend, and we've showcased some of those firms. There are a lot of others who are doing interesting things, but the percentages are still so low. And so as we were having conversations with institutional investors, other players in the market, the resounding statement that we kept hearing is that, oh, it's great, it's a good thing to have a more diverse team, but does it actually help you make money? And so what we said is, as IFC, as the World Bank Group, let's see if we can help answer this question. And that's what we spent the past few months working on.